Hello, I'm Jessica Sin from Stewardship Finance Academy, and in this video, we are going to discuss about the food shortage issue, food security, and investing in agricultural assets. The global food shortage issue has been going on for a while now, and the United Nations reported that in 2021 alone, nearly 1 billion people went hungry last year without sufficient food, and at record high food prices in 2022 have triggered a global crisis that may drive millions more into extreme poverty, magnifying hunger and malnutrition. Now, the thing is, rising food prices have a greater impact on people in low and middle income countries because they spend a larger share of their income on food than people in high income countries, so they actually are affected the most. Let us first discuss the drivers behind the global food shortage issue. So the first one is, of course, resource constraints. Now we have scarce resources on planet Earth, which are getting more limited as more and more land is being used up, but the global population keeps increasing, so there is not enough space to grow food. And then we also have climate change, which is also another issue that threatens sustainability. For example, weather issues like drought can result in a significant drop in crops production. And recently, we also deal with some economic situations due to several world events, like the COVID-19 pandemic has disrupted the global supply chain by causing a lot of major ports to shut down, so you have a lot of shipment delays. Then the Russia-Ukraine war in 2022 has also disrupted food production and supply. So altogether, this has led to the global food shortage issue. Now let us look into detail at food prices. So when we come to agriculture, we will have to talk about fertilizers as well, not just the crops itself, because we need fertilizers to make the crops. So because of global supply chain disruption, agricultural input costs such as fertilizers, seeds, and also chemicals have reached all-time highs. And the European fertilizer plants are significantly cutting down production because of higher energy prices as a result of the Russia-Ukraine war. So because we have less fertilizer supply, it leads to higher prices, which is then passed on to higher food prices as a result. Now, Russia actually plays a huge role in this because Russia is the world's top exporter of nitrogen fertilizer, and it ranks second in phosphorus and potassium fertilizer exports. And Belarus, which is a Russian ally, which is also contending with Russian Western sanctions, is also another major fertilizer producer. So when you look at Russia and Belarus together, both of them account for over 40% of global exports of the crop nutrient potash.
I always think that Russia are the top exporter of oil. Didn't know that they're also the top exporter for fertilizer as well.
Yeah, so because they export two such important commodities that people use so much in this world, so the war really impacted commodities prices. Then the main destination of fertilizer exports from Russia are going to large economies like China, Brazil, United States, and India. So of course, all these countries are also feeling the food shortage part. Now let us look at the agricultural output itself, which is grains. Wheat is one of the most used crops in the world annually because it is used to make a variety of food products like bread and pasta, which many people around the world consume in different parts of the world. Now, Russia and Ukraine together, they are the world's top wheat exporter, and together they account for nearly a third of the global wheat supply. So you can look at this picture here, which shows the grain exports in millions of tons for the different world's largest exporters. So Russia and Ukraine together, they account for 1/3, just falling behind US. Now, Ukraine itself is also a major exporter of corn, barley, sunflower oil, and rapeseed oil. So because of the war, the food exports from these two countries have been disrupted, leading to a significant reduction in global grains supply and thus the inflation in food prices. Now, we have seen that both corn and wheat provided double-digit returns, with corn reaching 8-year highs and wheat reaching prices not seen in over 9 years. So overall, these two grains followed 2021's trend of increasing food prices, as the United Nations Food and Agriculture Organization's Food Price Index reached a 10-year high, rising by 17.8% over the course of 1 year. So apart from oil rising at record high levels, grains, fertilizers, all of them have also been recording higher prices just recently. Then another issue is, of course, the trade restrictions. Due to the ongoing food shortage issue, several countries have also imposed trade-related policies with a goal of increasing domestic supply for their own citizens. So you see, as of July 15, 2022, 18 countries across the world have implemented 27 food export bans, and 7 have implemented 11 export limiting measures. So this further contributes to a worsening of the global food supply issue.
So I see. So what can we do in light of this to hedge against the inflation of food prices?
Well, to hedge against inflation of food prices, we can invest in farmland, which is an agricultural asset. So agricultural farmland is like a real asset that produces commodities like corn and grain. So these are your agricultural crops. And some people have referred to farmland as a gold-like investment. It is safe, but it has a yield because farmland produces crop across the year, which you can actually sell it. So you get cash flow annually from the sale of the crop produced, which is unlike gold, whereby if you just buy gold, you don't get any interest or any passive income from it. And if you look at it, food and agricultural businesses are a $5 trillion industry globally. And because more than 50% of the Earth's habitable surface is used for agriculture, and we can also see the population has been increasing, and 1 billion people around the world are employed across the agricultural sector value chain. So we see this industry is actually a very important industry, and it's going to get more and more bigger and valuable over time as the consumption for food continues to grow with a growing population. And if you look at the data published by US Agriculture Department, about 80% of rented farmland is actually owned by investors who do not farm themselves. And we can look at also people like Bill and Melinda Gates, which are billionaires. They together have accumulated roughly 270,000 acres of farmland in less than a decade. And another billionaire, which is Amazon founder and chairman Jeff Bezos, has amassed 420,000 acres of farmland in the US in recent years. So all these rich people are actually starting to buy up farmland across the years. So they definitely see the importance of agriculture and food growing forward.
I guess it's good hedge against the war as well. No matter what happens in the world, I guess everyone still need to eat. So I think food will always be a basic of human needs. So having the farmland, I think, give us an upper hedge, against all the different economic crises that may come.
Yeah, definitely. So whether you have inflation or recession, also people still need to buy food. Hence, there is a demand for food. So the demand for farmland has also increased accordingly. And if we look back at history, just back since the early 2000s, actually the demand for farmland among institutional investors has exploded. Like in 2005, there were less than 20 farmland-focused investment funds globally, but this began to change following the 2008 to 2009 global financial crisis, as more money started flocking to safer investments like farmland. And by 2020, the number of funds specifically focused on farmland alone had grown to 166 investment funds. So if we look at the performance, since 1991 until 2020, US farmland has produced a positive return every year during that period, generating an average annual return of 11.5% according to the USDA. And if you compare it to the S&P 500, S&P 500 returned only 8% average for that same period. And also S&P 500, because it includes stocks across a lot of industries, it is actually much riskier than farmland also. So if you look at both returns and risks, on a risk-adjusted basis, farmland actually outperforms the stock market. So this justifies farmland as an investment worth looking into. So why farmland can be a good investment? It's because not only you can get capital appreciation if land prices increase over time because land is becoming more limited, you can also get passive income from periodic rental and also crop payments. When you rent out the land to other farmers, or you hire farmers to grow crops on your land and you sell the crops, either way you get annual cash flow. Now let's look at some of the investment view of farmland. Why would you want to consider it for your own portfolio apart from other assets that you already have? So the first is, of course, looking at supply versus demand dynamics. As population grows, more land becomes inhabited, land supply stays the same, but population keeps growing, so food demand will keep growing. And because food demand images outpace the growth of food supply, this will lead to farmland becoming more valuable. And also, as mentioned earlier, farmland is a recession-proof and inflation-proof investment because it is a consumer staple. No matter what financial crisis, what pandemic or what war the world is going through, everyone still needs to eat. And because it is food, it is a necessity. Even if food prices increase, people will still need to eat. So people will still buy food, although there is inflation. So this is why we say farmland can be a hedge against inflation, because the demand is price inelastic. Even if price increases, people won't reduce their demand significantly. And if we consider it on a portfolio management basis, right, you will also want to look at the low volatility of farmland. Because farmland, agricultural assets, they provide stability for investors, especially during adverse market conditions. During stock market downturn, your stocks may be performing badly, but farmland returns are still about the same because it has very low correlation with the stock market. It is not really affected much by what goes on globally or in the domestic economy. So it has actually demonstrated less volatility than most other asset classes. So here you can actually see a table which shows the returns, the mean returns on average for different asset classes across the time period 1992 to 2020. You can also see the standard deviation, which measures the risk, and also the Sharpe ratio, which gives you the risk-adjusted return measure of the asset's performance. And here we can see that when considering both returns and risk at the same time, looking at the Sharpe ratio, farmland actually has the highest Sharpe ratio, which means that farmland has the highest return per level of risk compared to other investments like stocks, bonds, real estate, and REITs. So this can actually be a good asset that you can consider for your portfolio. And of course, low correlation and diversification. Now we see that during economic downturns, correlation between asset classes unfortunately becomes the strongest. So when stocks fall, then sometimes bonds may also fall at the same time, and real estate also, the performance follows the stock market. Like now we see stock market is moving down, the real estate prices may also be moving down at the same time. So asset classes tend to become more and more correlated during periods of economic downturn. But farmland operates independently from other assets. So it is a good way to diversify your investment portfolio during volatile periods. And then as we look across the years, technology advancement has also improved production efficiency. So we see information technology advancement has helped to make farms more efficient. We have automation, robotics, and the use of drones to fertilize crops, as well as autonomous driving capabilities, which allow farm tractors to self-drive. So all this can actually help to improve farm production efficiency over time and increase the yields of farms, which in turn can increase farming crops prices if you sell the crops. And then satellite imagery and data management systems have also allowed all these farmers to also manage their crops better, and they can also leverage data to optimize their production cycles.
I think this is good, but I guess not many people has money to own a farmland. So is there a way to get exposure to agricultural assets without owning them directly?
That's a very good question. So actually, even retail investors, people like you and me, can also have exposure to farmland without actually buying the whole farmland. So you can actually buy farming stocks or even stocks related to companies that sell either crops or even fertilizers. So for example, a popular company would be Archer Daniels Midland Co. The ticker is ADM. So this company is a multinational agricultural processor. It provides plant-based elements for consumer foodstuffs and also industrial biosolutions. So it sells and exports commodities around the world, including in Europe and South America. And it also processes corn as well. So it is very big in the agricultural space. But if you do not want to buy the stock of a company alone, you want it to be more diversified, you want to have exposure to more agricultural assets at the same time, then you can also consider exchange traded funds, ETFs, which hold companies that are in the agricultural space. So for example, it can be the Van Eck Agribusiness ETF, which is the ticker MOO, or even the Invesco DB Agriculture Fund, ticker DBA, or even the MSCI Global Agriculture Producers ETF, etc. So there are actually a couple of ETFs that you can choose from. Or separately, you can also choose to invest in real estate investment trusts that hold farmland. So these are companies such as Farmland Partners, the ticker is FPI, or Gladstone Land Corporation, the ticker is LAND. So by purchasing a share of these REITs, you also have a share of the cash flows provided by these REITs through the sale of the crops or the rental of the farmland. So these are all options that you can actually check out. And in contrast to having a lot of capital, by buying stocks or shares of ETFs or REITs, you only need to come up with minimal capital, yet you get about the same exposure to the farmland. So this is an area that you can look into.
What about the risks to consider for an investment in agriculture assets?
Well, since I touched on the returns earlier, we cannot forget about the risks as well. So when we talk about the risks, typical farmland agricultural risks would be, of course, the weather, climate change. Now, a farm could underproduce or have a low quality yield due to weather patterns, seasonal patterns. So there may be times of the year, and also depending on where the location of the farmland is, it might be susceptible to droughts, which can disrupt the crop production cycle. So of course, this is something to take into consideration. Not the whole year, it may generate consistent amounts of crops. And also from the macro perspective, prices for commodities such as corn, soybeans, and wheat, well, they very much depend on also economic conditions. Of course, as I said earlier, these foods are still typically quite recession proof, but sometimes commodities, their prices may still be affected a bit when there is fear of a recession or when oil prices fluctuate. So although they might not be that bad compared to the stocks if you buy stocks in other companies, but commodity prices is still something we need to take into consideration as a whole. And also, the returns would also depend on the US dollar as well, because a stronger dollar has been weighing on commodities like fertilizers, because when we talk about commodities, right, these are exported all around the world, so they're usually priced in US dollar. So if the dollar gets stronger, US dollar becomes higher, it becomes more expensive for people outside of globally to buy these agricultural commodities. So if this is the case, then the demand would be impacted. Yes, people still need to eat the food, but they may choose to buy a bit less because the dollar is making all these commodities more expensive. So that is also one factor that maybe have to take into consideration. But overall, I would think that the returns are still pretty good enough, and if you look at it, it's actually a good asset for you to diversify your portfolio. So you can still hold your stocks or your real estate, but perhaps consider adding some farmland as an investment as well.
Yeah, I think this is a very good piece of information for our students and also whoever is watching this video.
Yeah, definitely. So I hope that by watching this video, all of you have some takeaway from it.